Hello everyone, my name is Vaishnavi. My company review session is on Kotak Mahindra Bank. The MD and CEO of Kotak Mahindra Bank is Uday Kotak. We live in a world where we will have to be constantly on our toes. Whether it is the airline sector, telecom, renewable energy, real estate, or finance sector, we are in an era of survival of the fittest. This was told by the Uday Kotak. The history of the Kotak Mahindra Bank. In 1985, Uday Kotak founded what later became an Indian financial services conglomerate. In February 2003, Kotak Mahindra Finance Limited received a banking finance license from the Reserve Bank of India. With this license, Kotak Mahindra Finance Limited has become the first non-banking finance company to convert into the bank, and the bank was known as Kotak Mahindra Bank Limited. In 2015, Kotak Bank acquired ING Vysya Bank in a deal valued at 150 billion. After the merger, ING Group, which controlled ING Vysya Bank, owned a 7% share in Kotak Mahindra Bank. While Kotak Mahindra Bank is an Indian private sector bank, it is headquartered in Mumbai. It offers the banking products and financial services. It is the second largest private sector bank. In 2020, Kotak have pledged to donate 50 crores to PM CARES fund to fight against this COVID-19 pandemic in India. The products of the bank are Bank Plus GMAT Plus Trading Account, Kotak Payday Loan, Loan EMI payments, FASTag recharge, debit and credit cards, mutual funds, insurance. And the promoters of the Kotak Mahindra Bank are the 26% of them are the promoters, and the 42% are from the foreign institutions, 10% are from the NBFC and mutual funds, 10% are from others, and 8% are from general public, and 2% from the financial institutions. The shareholders of the promoters are Uday Suresh Kotak, Pallavi Kotak, Suresh Amital Kotak, Indira Suresh Kotak, Janak Dikarai Deshi, Aarti Neil Chandriya. The competitors are HDFC Bank, Bandhan Bank, ICICI Bank, Axis Bank, Federal Bank. SWOT analysis of Kotak Mahindra Bank. Strength are it is the second largest private sector bank. It has innovative financial products, and it has a comprehensive cash management system. It has over 20,000 employees. The customer account base is of over 2.7 million. Weakness. It is a lesser penetration as being late entrance, low publicity and marketing as compared to the other banks. The opportunities, and there is a trend in increasing the banking industry, and it has explored the opportunities abroad by the international banking. Threats. It has an economic slowdown and has a high competitive environment and stringent banking norms. Porter's five force model. Competitive rivalry. Bank has two things to capitalize. One is economies of scale and other is spread margin. Economies of scale should have a large market share, and the number of players are increasing in the intense competition. Due to this, Indian and foreign banks, there's a high market share will increase the competitive rivalry among the existing players. Bargaining power of buyers. Bargaining power in the banking industry for the corporates would largely depend on the credit ratings. The large corporates will have various services and big transactions which may have the enormous bargaining power as their credit rating will be high. Bargaining power of suppliers. Bargaining power of suppliers in the banking industry will mainly depend on the retailers and the corporate, which determines the demand and supply of money in the market. The bargaining power of suppliers depend on the risk-return characteristics of the alternative investment products. Threat of entry. Existing firms have strong presence and recognition. Due to collapse of a few private sector banks, it creates a virtual barrier for the entry to private and foreign players. The industry is a capital incentive which acts as a barrier to entry. So the threat of entry is the moderate for the banking. Threat of substitutes. Threat of substitutes for the banking are local money lenders and hundiwalas, financial companies and NBFCs. Local money lenders and hundiwalas are unorganized sectors and financial companies and NBFCs are organized sectors. Unorganized sectors are increasing the business whereas the organized sectors are increasing its network. Corporate social responsibility. Kotak Education Foundation. Kotak Education Foundation was founded in 2006 and it is supporting education in the rural schools. In financial year 2013 to 14, it launched a community engagement in 3 villages of Nasik district to create the infrastructure. As the Nasik district is an agricultural area. Nearly 40% of these villages are the small farmers and agricultural laborers. So, to create the infrastructure for education, Education Foundation has launched the community engagement, health, safety, and welfare. Health, safety, and welfare are the it's used for the employees and the contract staff as it's a top priority for the bank. As a part of the induction, each and every employee attends the session on the physical security, general fire safety, and building the evacuation. The floor marshals were trained to handle the emergency situation in the various corporate offices in the Mumbai. Financial analysis. The company's main financial strategy is to maintain the neutral allocation for the equities and the investors should have the allocations in line with their strategic level. The company maintained the focus on the short-term and high-quality segment. The net revenue of the company for the 5 years has increased from 18,000 to 32,000. The profit after tax was increased for 27.13%. The capital employed has a growth rate of the 9.69%. The EPS has also drastically increased from 2016 to 2019. From 17,000 to it has increased to 28,000 and the sales were also drastically increased from 12,000 to 25,000. And the share price of the Kotak Mahindra Bank. You can see the last 5 years share price in the screen. We can see the share price is drastically increasing. But the lowest share price is at the point on the month of the February 2015 at 630 rupees. The highest share price is on January 31st, 2020, that is 1300. Thank you.